Good morning, everyone. Welcome to our Wednesday morning trading room. My name is Eric Senft. I'm going to be your host here this morning, and I'm going to be showing you the diversified trading system, which is what you see here. And it's diversified because we're looking at the market from three different points of view. We have three different tools operating here. Across the top, we have the Hawk Micro Scalper. Through the middle, we have the Falcon Swing Trader. And across the bottom is the Eagle Trend Trader. The charts you see here on the left, these are the NASDAQ. The charts you see here on the right, this is crude oil. I'm also watching gold and soybeans on my other monitor, but I would be very happy to pull up any market which is of interest to you. So please don't be shy. Regardless of the tool that we're using, all the signals develop the same way, and I'll be going through this a little bit as the morning progresses. But all the signals start with a warning dot and an audio alert. That tells you that some of the signal parameters have been met. When the signal is complete, we're going to get a triangle and a hash mark. That tells us it's decision time. And we need to decide whether or not we're going to take that trade. Now, we normally focus on what we call high probability signals, so we don't necessarily chase every single signal here. For instance, here was a buy signal. Even though this worked out, this was not one of our high probability signals because, well, in most cases, we're looking for what we call confluence. We're looking for, in this case here on the Falcon, a red trend line, a red filter, a red signal. We are working a trend change signal here on the Falcon. You know what? It's really early, but I may, what time is it? It's only a couple minutes into the session. I don't know if I want to hop on that signal just yet. Oh, sure, why not? It's a demo room. We're here to demo. All right, so our hash mark is printed here. I can, use a little discretion, enter my order a little bit higher, and what I'm going to do is I'm going to just go in with a single because it is still early. This tool you see here, me using here on the right, this is called the Trade Manager. This is a very important tool, or I think it's a very important tool, because what it does is it contains your risk. It never allows you to risk more than you can afford. Now, I flipped here to manual mode because, well, the signal is early. It hasn't engaged yet, as you can see. But very often, early on, the market can get a little wonky, shall we say. We are near the overnight high. So we do have a little bit of a sideways range going on. So I flipped to manual mode. That will default to this value up here. But normally, if I leave it in risk mode, risk percent mode, it will cap my risk at this amount right here. So currently I have it set at 2%. That means no matter where I place my stop loss, I will never risk more than 2%. So the order has since changed, so I'm going to delete it. I'm going to show you how this works. So if I placed my stop, so here's that buy signal. If I took it on the hash mark and placed my stop right here, notice the risk amount is $400. That's 2% of my account. If I place my stop, say, down here, oh, it's still about $400. That's 2% of my account. If I place my stop, say, way down here, well, it looks like I can go a little deeper still to make my point. I'm still risking approximately $400. But did you notice what changed? The quantity has changed. So regardless of where you place your stop, you keep your risk constant. So, like I said, you never end up risking more than you can afford to lose. Very important concept. All right, we're kind of going a little sideways here right now. Crude oil looking, well, maybe a little bullish on crude. We had a trend change signal here on the Falcon in crude oil just out of the North American Open. So crude oil opened 6 a.m. Pacific. Looks like we're kind of nursing that trade a little higher, almost to its profit target. These horizontal lines that you see on here, I may as well tell you about these really quick. This is the ultimate support and resistance suite. This is what we call a system add-on, or an indicator, if you will. That means it can be used on any chart, not just a DTS chart. It's 21 support and resistance lines forecast for today's trading. And no, they are not floor pivots. No, they are not Fibonacci retracements. All modesty aside, they're much better. The gold line that you see here, this is the median line. The blue line above is primary resistance. The blue line below is primary support. These three lines set the tone for the day. Now that the market's above here, crude oil is actually a little bit bullish. So we may end up seeing crude oil continue higher from here. If it breaks back down and gets back below the primary resistance, it's very likely to go here to the primary support. So you can use these lines as confirmation of a signal. You can use them as profit objectives. There's a lot of different ways traders use those lines. All right, well, we're just kind of stuck here going sideways at the moment. I'll show you the Hawk Scalper. The Hawk Scalper, as the name suggests, is designed to pick up scalp signals. We're printing a lot of yellow bars. Those tend to develop within a sideways trading range. So when you start to see yellow bars, these clusters of yellow bars printing on more or less the same latitude, your filter is starting to break up. The trend lines are starting to fail. That tells you that you're in a sideways range. Best way to trade a sideways range is to actually let the market get outside of that range. If it doesn't behave, I'll take a signal just so that you can see how everything works. But ideally, what we want is we want to let the market break out, retest, and then give us another signal. Same thing to the upside. Allow it to break out, retest, and then show us that it can stay out. Now we could get a little bit more aggressive here. We are getting a failure signal of the red bar buy. This was our red bar buy signal. Those tend to develop late in a trend, and sometimes we can look at shorting the failure, but I'm not going to get too crazy here at the moment. We'll see if we can't find a quality signal first. If not, we'll jump on something. Yeah, Elmer's asking here regarding the trade manager. Despite the trade manager, Elmer asked, the quantity still changed in the number of contracts, so 1, 2, 3, 4, since there are no half contracts. That's right. The trade manager will always round to contain your 2%. So let's say, let's say we look at this macro pullback signal right here. So there's a macro pullback signal. The macro pullback signal is a hawk signal. It occurs when the micro line, that's the thin one, goes out of sync. Everything else stays in sync, but the micro line goes out of sync. So let's say I chose to cover the trade right there. This is approximately 2% of my capital. Trade manager says, okay, for risking 2%, you can afford 6 contracts to do this trade. Well, what if I look at this trade and I say, oh dear, maybe I should cover it a little bit deeper. I'm not really happy with running my stop that close. I'm going to run it right here. Yes, there's a little bit of a rounding error as I get my 3 contracts. So I've got half the position, but the risk amount is still approximately the same. It's still whatever is closest value to 2%. And then, of course, if I run my stop way, way, way down here, well, I can go a little deeper still, it looks like. So I can run my stop way down here. Well, in theory, I could run it all the way down so that it's somewhere around $400 deep, because that's my max, my 2%. But the trade manager always adjusts the quantity. Now, for those of you trading Forex or the stock market, you'll want to set the trade manager to round to the nearest 10, or in the Forex, sometimes to the nearest 100. So you don't get, 383 contracts or 102 shares or whatever. But the important thing, as I mentioned, is that you're capping your risk. Now, here's something a lot of people don't pay much attention to when it comes to risking money on a trade, is the probabilities. So what do you think the probabilities are that this trade will work out versus the probabilities that this trade will work out? Which one do you think has the higher probability of success? Now ignore risk-reward ratios and all that. I'm asking, which trade do you think will reach the profit target before it hits the stop loss? The one with the stop loss down here, or the one with the stop loss down here? Profit target's the same, entry's the same. We're just talking different stop losses. Is it the one with the tight stop or the one with the looser stop? Okay, well, intuitively, it should be the one with the bigger stop, right? Because we're allowing the market a whole lot of time to move against us before it hits our profit target. Let's say the market does one of these. It brings us in, and then a couple bars later, it reverses and stops us out, only to reverse again and go to our profit target. How many times has that happened to you? If you're like me, more often than you care to count. And there's a very realistic reason why the market does this on a continual basis. We won't get into it right now, but there's a reason the market just breaks support by a tick or two and then rallies. There's a reason it breaks resistance by a tick or two and then fails. So all these things actually have fundamental price reasons behind them. But your job as a trader is to make a profit. obviously. But yet, so often, we keep our stops so tight that we get stopped out prematurely, only to watch the market go on to our profit target. Meanwhile, we've already incurred a loss. But remember, our risk amount is the same. It's not like I'm risking less having the tighter stop. It's still going to cost me $400 if I put my stop right here. So why would I not run a deeper stop? Well, I'm going to earn less profit. If I have my stop right here, I think I was running like 6 or 7 contracts, which would be a $350 profit if it hits. But the probability that the market will hit that profit objective before it hits my stop loss is probably 50-50 at best. There is no way to know. Now, DTS is very good at picking up immediate momentum. You see here, here's another macro pullback signal. The market never hesitated, just went up, and I think it never hesitated here either. Just went straight up. So DTS is very good at picking up market momentum on a signal. But sometimes you're going to get a little hesitation. Let's say we took this green bar sell signal and we look to buy the failure. This is actually our counter trend signal. This will be a good example. So here's our signal. We're risking $400. The market engages the signal. No, all right, it hit our profit target, but let's pretend for a moment it didn't hit the profit target. It comes down, stops us out, and then goes up and hits the profit target. So what we, for the sake of running the stop a couple of ticks deeper, yes, we've reduced our profit, but the probability that the market will find that profit has increased. I hope that makes sense. Because that's one thing I see people doing all the time is they will strangle their trades. They'll keep their stops so tight that the trade never really has a chance to get to its profit objective, which is a shame. All right, well, yesterday the market made a big run up. Today they're kind of dragging their feet a little bit. Struggling somewhat to get above the where were yesterday's highs? Well, the highs through the day fell right around there. Overnight high poked through a little bit, but we're kind of sandwiched between there now. Between the high of the yesterday's session and the high of the overnight. All right, well, we can't make them do anything, can we? So we're just going to have to wait a little longer. Let's see what's going on in the crude oil market. Crude oil, I suspect, might be a little bit quiet as well, given crude inventory out at the bottom of the hour. Still working that trend change signal that we had early on around the open. The trend change signal on the Falcon, this is one of our high probability signals, occurs when the trend line changes color, hence the name. The market has this little characteristic up, down, up pattern. So the up changes the trend line color from red to green. The down is the sellers trying to recover the market, and then the up is the buyer saying, oh, no, you don't, and they take control of the market again. What's interesting is this one, not only is it a trend change signal, but it's also a late filter entry signal, which is also a high probability signal. And the late filter entry signal occurs when the filter goes out of sync, comes back into sync, but at no time does the trend line change color. So two high probability signals overlapping on each other, and you can see that had some very nice follow through on it. So here was the signal. This is what it looked like when it was unfolding. Can I cover it down there? Ooh, I can. Trade Manager will also keep you from taking a trade you can't afford. Let's say I wanted to set up the trade like this. Trade Manager says, nope, sorry, Eric. At 2%, that's out of reach for you. Now, generally speaking, anything less, risking 5% or less is considered prudent. And you can see here crude oil made a nice little swing higher. Hey, well done, Tony. Tony says, good morning, Eric. I got up early, put on a trade with Trade Manager, set my stops where I wanted them, and went back to bed. Up to trade with you, I was happy to see I had $246 in the cash box. You know, I used to do that too with the London Open, which is around midnight my time. This was before I started the trading room and had to be here for the 6:30 Open. But if I was up a little bit later, I'd check the London market, the London Open, and I'd maybe sit with it for 10 minutes or so. And if I had a signal, I would do the same thing. I would place my order. I would set my Trade Manager. Now these blue dots that you see here on the Trade Manager, this is your stop strategy. And these are all adjustable. You can change the parameters. We've got 16 stop strategies here to choose from. But I would take a trade and I would set it and forget it. So I'd set up my trade like this, and I'd go to bed, and you'd wake up, and like you said, sometimes it's very nice to see that profit sitting there. Now, the Trade Manager, what it does is it will actually pick up your stops and start trailing them according to your selected stop strategy. So it totally automates your trading. You don't have to watch that trade any longer. You can just let your stop strategy deal with it. And I will put on a trade here shortly so that you can hopefully see it roll the stops. And we got a market that's obviously conflicted. See all these yellow bars here on the hawk. Very apparent sideways range. We are producing some sell warning dots, but we don't have a signal yet. Everything is out of sync. Or the macro line is still out of sync. Well, almost thought we were going to get a 3-arrow. Oh, I guess we do have a 3-arrow consolidation here. possible macro pullback. Okay, if you guys are looking for a trade to follow me on, this may not be the best one, but I'm going to show it to you just so that I can show you how the trade manager works. And I'm going to run my stops a little bit tighter. Let's do the ATR stop. Let's dial it back a little bit. Okay, so stops are enabled. I'm going to submit the order. I've got the warning dot. I know that if this bar finishes on the high, the hash mark is going to print right here where I've got my entry. And like I said, this may not be the best order to follow me on because crude oil is really laboring here. And they've rejected going higher like 3 times already. See, we've made a high here, made a high here, made a high here, and now I'm looking for yet another high. So we don't like to see it print, you know, high, 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 and not keep going higher. That's why I said you may not want to follow me in on this trade. But what I'm going to try to show you here is, well, if the signal prints and it fills us, how the trade manager will automatically roll your stops for you. I hope. The market may well turn on its heels as well. Yeah, we've got some interesting stuff going on here. We're just producing a trend change signal here on the Falcon. We're into the hard edge on the Eagle. Now, why is that significant? Well, we normally anticipate a reaction when the market gets into the hard edge. So we're at the hard edge. We would normally anticipate a bounce, but we've got the same kind of thing going on here as what we've got in crude oil, namely, you know, attempted rally, attempted rally, attempted rally, and no follow through, which makes me think they may actually try to go the other way. All right, let me allow me to demo this one for you then. So the signal is engaged. I'm just going to set it up like this. We're going to go with the, nope, can't go with those stops just yet. We're just going to leave those stops right here. Again, this is probably not the best signal to follow me on, although I think we may see it continue a little bit lower. Just kind of check out the bottom end of the trading range. If in fact this is going to be a great big trading range, say maybe something like this, well, all the selling is going to occur up here, right? This is where the sellers are hanging out. This is where the buyers are hanging out. So we'll see. I'm just trying to demo the stop strategy for you. But we've got a market that's just dead sideways. All right, this one's shaping up a little bit. Oh, I think we got filled on crude oil. We did too. All right, let's go back here to the crude oil market. Now, once this order goes live, I've got my auto break even trigger working here, and I've got my preset profit target. I haven't mentioned yet, but you can set as many as 3 targets. And you can split them up however you want. You can set your profit objectives here. Currently, I'm set at 100% on my target, and my target is 10 ticks or $100, which is our scalp target for crude oil. Now, if we can get it to roll up or finish 1 bar higher here, we should see the trade manager try to roll that stop up. Come on, get going. Or not. I'd hate for you to take my word for it. I'd really like to show you how this works, because it works very well. Yesterday was an exceptional day on the NASDAQ with that big rally out of the open. And we used one of our more aggressive stop strategies, and it kept us in for pretty much the whole length of that morning move, which was very nice. If you'd like to see that, you can always check out yesterday's video, which would be September 27th, at the Indicator Warehouse YouTube channel. All right, well, let's put this back on the shelf for now. Maybe that will cause it to move. Oh, it is moving now. I'm just going to cancel the NASDAQ order, and let's go back to crude oil. All right, I'm going to delete my break even. I'll delete my profit target as well, just on the hope that maybe I can show you how this rolls the stops. Yeah, it's still fighting with this whole 45, 45 area. You know, just another hit after hit after hit, and the market refusing to break through. This is the type of trade where I would normally not run my stop this tight, given the continued hitting of the resistance area here. I would probably run my stop at least below here. Probably run it down there. I know for a fact I couldn't afford to run it down here. I have a feeling we're going to see crude oil back up on us here in a second. Just a hunch. Yeah, there they go. Let's see, maybe the NQ is going to be more cooperative. Well, they did kind of break out of this trading range a little bit. You know, the trading range that we identified earlier, like this. We did get a breakout. Now we're getting our retest. It'll be interesting to see whether or not the buyers come through. This now is a macro pullback, or sorry, getting my terms confused. A first micro-macro cross signal, which tends to be a very high probability signal. I'm going to dial down the risk, though, just because the market is still sideways in my book. So I will go with the deeper stop. Let's go with a swing low. Maybe a couple, 3 ticks off the lows. There we go. We'll accept that. Okay, so now Trade Manager's got my stops. I'm going to delete, again, the profit objective and the break-even trigger to see if we can't run this one out. Oh, is that the deal? Salish says Yellen is speaking, Janet Yellen speaking, so that's going to account for the sideways nature of the market. And no doubt it will spark the market after this. All right, so can preview other stop strategies as well. Let's say I wanted to go with something like super trend. I don't know how well you can make out those orange hash marks, but that's the preview of the super trend. Let's say I want to make that a little bit more conservative or liberal, whichever way that works. No, let's go with chandelier. No, that's still kind of cozy. Okay, I think we're just going to hang with the swing stop for the moment. See, we're coming back into the trading range. Remember, if you weren't in the room earlier, people asking, how do you trade a sideways market? Well, let it break out and let it prove to you that it can stay out. Muy importante. Then get that signal. Same thing to the downside. Let it break out. Let it prove to you that it can stay out, and then look for that signal. So we got the breakout, but no real evidence that the market can stay out, at least not yet. Getting a red bar buy signal, so we might see the buyers show up. How's that crude oil trade doing? Oh, it's still hovering. Still haven't had a chance to show you that it will roll the stop. It will, promise. But do you see what I mean? Like, we don't need to babysit this trade now. We can look for other opportunities. Oh, and we're just about to get tagged here. If they fail on the rally off these lows. Come on, let's get a little bit of a rally. Now, if the buyers step up here and actually rally the market, I'll get a little bit more aggressive with my stop. Because it's going to be the last chance really for the buyers to recover this market. If it fails at this point, well, I'm going to get the stop out. But you know what? Even though it may be a stop out, I've only risked 1% of my capital. So I can take this trade and, okay, it's never fun to lose money, but at least I can take a little consolation in the fact that I didn't lose too much money. I've lost 1% of my trading capital. So if I'm trading a $10,000 account, I've lost $100. Right? $100 isn't going to break you on a $10,000 account. $1,000 loss. Okay, that's going to put a little wrinkle in the account. And yet, I see traders doing it all the time. You know, people who come to me for one-on-one coaching and mentoring, and I see them do it all the time. They risk far more than they can afford to lose, and then they wonder what went wrong. Oh, I know. It must be my signal. What's the best settings for stochastics? Or what's the best settings for MACD or RSI? Or how do you use Bollinger Bands? And so the hunt continues. And they never realize that it's not the signal, it's how you manage the trade and how you manage your money. That's what's going to make the difference. right, so we're still kind of dead sideways back inside this trading range. Let's see, did crude oil move higher yet? Nope, not yet. Yeah, thanks, Russell. Russell reminding me, oil report out in 20 minutes time, so the market's probably going to remain relatively soft until then. Come on. This first micro-macro cross signal that I'm showing you right here, this is a very high probability signal. It runs probably about 80% accurate. Of course, that means that 20% of the time it will fail. And, when you're looking at taking signals, you always need to take the market context into account. We were talking about this in the trading room just the other day. So often people focus just on the last 3 bars and they ignore everything else. They ignore all this back here. You can't ignore all this. All this context here, this is very important. It is going to affect what's happening right here, right now. Gold's kind of quiet also, as are soybeans. They're a little bit on the uptick in soybeans. We just got a red bar buy signal here on the soybean market. Some of you will also see this as a rule of 3, which is the counter trend signal. I wouldn't argue with you on that. If it was printing like this as a rule of 3, I would probably not take the signal right on the hash mark. You could, of course, but then you should cover above the high. I think I may either wait for the trend change signal to develop or perhaps even set up to take it below, just out of reach. Take it below that swing. So soybeans a little conflicted right now. Now we are producing a red bar buy signal, which is a high probability signal in the eagle. Let's see, what's the trend been doing? Ooh, trend's been down the last few days. Down a lot. So that begs the question, is this current rally a new trend, or is it simply a great big bear flag and the market's going to break out and head lower? Well, if you're looking at the rule of 3, it certainly looks like the market may start to unwind and head lower. The nice thing about this signal, and I would always recommend looking at a second push when you suspect the market is sideways, or, like I said, maybe just a great big bear flag. Second push means that we allow the signal to engage, and then we look for this reaction. So we've got this, the market topping out and now flinching, moving against the signal. That tells us the current limit of the bar, and we can end up covering the trade something like this. So what we end up doing is we end up looking for some renewed momentum if the market is going to fill our order. Oops. So we'll set that up like so. Put that back on the shelf. Let's see what we've got going on here. Oh, I thought I heard the stop get tagged. All right, here's something you will never see another trading room moderator show you, a losing trade. Yes, the DTS system is really good, but it's not 100%. So at first micro macro cross, we had reasons to be suspicious, which is why I dialed down the risk amount to only 1%. But the signal failed. It broke through the bottom here, and it didn't recover. So that's, again, why the money management is so important. All right, now we're getting a first micro macro cross lower. The problem I'm having with this one is, where do I cover the trade? Ideally, I should cover it up there, but Trade Manager is not going to allow me to do that. Not at 1%. So what if I entered below the low and covered around the macro line? Oh, that's doable. Now let's see, okay, the chandelier stops are right here. I'll go with the chandelier strategy. So if this order fills, the Trade Manager, which is these blue dots right here, will grab my stop and begin to manage it according to the chandelier strategy, which is the one that I've chosen. So all I'm looking for right now, remember that trading range that I keep harping on? Well, we've broken out the bottom end of the trading range. Now we're getting the retest. Right, so we've broken out, we're retesting it, and now we're going to see whether the market can stay out. If it can stay out, then there's a pretty good chance it will move at least a little bit lower. Oh, and crude oil may actually go up and allow me to roll my stop. Got another 10 minutes before the crude inventory report. We can get ready for it. Let's say we'll do it here on the Falcon. So there's a couple of ways you can trade the crude inventory report. Ideally, going into the report, what I like to see is I like to see the market going sideways with prices trading right in the middle of the trading range. And we've more or less got that today. That allows me to use my OCO function, OCO standing for one cancels other. And essentially what I would be looking to do is bracket the range. Now, crude oil can be very violent, so I think what I might do is I might buy above the secondary resistance and sell below the primary resistance. These orders are live when you put them on your chart, when you're using the OCO function, so you want to be careful. You don't place them too close. Now, I know that's a little ways away, but like I said, crude can be very violent. You could bracket here as well if you wanted. You could bracket the high, you could bracket the low. Take your chances. All right, so now I need to select a stop strategy. I don't want it too tight. Yeah, that'll do. All right, so I've got an active stop strategy. I've got my buy and sell orders. So now I'm just waiting on the crude inventory report. And we'll see what gives from that. And in the meantime, well, we have drifted back into a macro pullback. Oh, sure, here, I'll show it to you. This order is still a little bit dicey, folks. Again, if you're looking for a trade to follow me in on, this is probably not the best one. The market's a little, all over the place this morning. But this is a macro pullback signal. I pointed it out to you earlier. The macro pullback signal occurs when the micro line goes out of sync, but everything else stays in sync. Now, it's probably not a half bad signal because it does have a little bit of a bear flag shape to it. So a breakout lower is likely. All right, so there's the order. I'm going to delete my break even and profit targets. Now we'll see if we can get a little bit lower here. You'll see the trade manager start to roll my stops. It'll pick it up and it will start to roll my stops lower. Okay, trade manager, pick up my stops and roll my stops lower. Come on, NASDAQ, be nice. So the market's still struggling to stay outside of the trading range. I'm just going to roll my stop above this little swing here in the macro line. Now we're into yellow bars. No, they're still sideways. Remember what I said about the yellow bars clustering like this at more or less the same latitude? It tends to happen during sideways markets. Tells you that the market is in chop. Might get a 4-arrow consolidation out of it. 1, 2, 3. This is going to be signal number 3. If we get that fourth signal, we should get the follow through. All right, just want to make sure the market's not getting too close to my orders here on crude oil. Nope, not yet. Come on. All right, what are we doing for time? So about 5 minutes still before the crude inventory. And this still hasn't moved enough for me to actually show you how the stops roll. Well, surely one of these trades is going to allow me to show you how the trade manager rolls its stops. Okay, we're getting a little warmer here. Come on. Let's see how we're doing with our support and resistance lines. Maybe they'll give us a clue what's going on here. Oh yeah. You can see we're sandwiched between the secondary resistance and the primary resistance line. Now that we're kind of trying to break the primary resistance, our target would be here, would be the median line. Well, while we're kind of waiting for things to come about, here's a interesting little link you might be interested in. 3 things you can do right now to become a more profitable trader. Presentation that Adam and I did for NinjaTrader and Trader Kingdom, and I think you might find it interesting. It's non-software specific, which is nice. Doesn't require that you have the DTS system, rather it's something anybody can do. Okay, a couple minutes here into crude inventory. I'm going to leave the NQ. Oh, here, let's throw a Geiger counter on here. Here's an indicator that I haven't pointed out to you this morning. The Geiger counter is a great little tool. There it is. It's essentially a tape reader. And what the Geiger counter does is it gives you a visual of the time and sales. And you'll see the tape fill up here in a moment. And what we're going to pay attention to is this dial that's around the outside here. When the dial pulls over hard one way and sticks, then we can anticipate more buying. And when it pulls here to the other side and sticks, we can anticipate some short-term selling. The orders are getting a little bigger. Another minute or two. Oh, you see they're starting to load up. Usually it's just onesie-twosie kinds of stuff. So sellers are loading up right now. See how it's stuck there? So we can anticipate a little bit of a move to the short side. Now they're flip-flopping a little bit, fairly balanced. Actually, maybe we'll do a more aggressive stop. What do parabolics look like? Yeah, why don't we do parabolics today? We'll keep those stops really cozy. All right, about less than a minute to go for the crude inventory report. There it is. The other way to trade crude inventory, of course, is just to allow the market to break out, as it did here, and then look for the follow-up signal. All right, so we're long, and I'm going to delete the break-even trigger here for a second. And hopefully you notice that the trade manager grabbed my stop and is now starting to manage it to the parabolic strategy. Now this is a very aggressive strategy, but I just wanted to show you how it actually grabs the stop and starts to roll it up. So now that the market has actually made its breakout, we know that this is the high up here. If we get a little bit of an uptick here, there we go, right here on the, look at that, almost right on the number. Actually, I think it did hit it on the number. The secondary resistance line. So this can now be our new range. So the report is released. We've established a range. We can bracket it with our OCO order. And we can look to trade the market on a breakout higher or a breakout lower. Our soybean trade doing not too badly. So we're up a couple of dollars here off of this red bar buy signal on soybeans. Soybeans are pretty good. Once they settle on a direction, they really tend to stick to it. So that's why I extend my profit objective a little bit with soybeans. Okay, we'll stay with the crude oil trade here just a few minutes longer. All right, actually produced a, well, let me delete the break even. Actually produced a trend change signal here. All right, so see how the trade manager is rolling my stops down? We've since hit the break even on the profit, or what would have been our profit objective, but let's see if we can't run this one out a little bit. Oh, by the way, you can always set your trade manually to break even as well. If you're looking at this trade and you're thinking, oh dear, they're backing up on me, I want to take the trade to break even, you can hit your break even button and you can preset how many ticks you want to save. So it can be, well, as many as you want, really. Break even plus 11 ticks, or you can even go to the negative. You can be break even minus 4 ticks, or whatever you would like. All right, so it looks like I got tagged there more or less at break even anyhow. But hooray, at least I was able to show you how the trade manager actually rolls your stops for you. This Geiger counter, as I pointed out, it's a system add-on, a standalone type indicator. So you can put it on any chart, not just a DTS chart. And our crude oil trade here that we were nursing for so long looks like it made a couple ticks higher, and then we got stopped right here according to the ATR strategy that we were running. And then they came back with a first micro-macro cross lower a couple minutes later, and that too hit its profit objective, and then followed by a macro pullback. So a couple of quality scalp signals there on crude oil. Finally. Still waiting otherwise. Soybean trade plotting higher. Wasn't as crazy as some of the crude inventory reports we've seen, but nice to see a little activity come into the market. All right, well, we've got another trend change signal here on the Falcon. So the trend, here's the push that changed the trend line from green to red. Here's the reaction. Here comes the sellers again. I know the signal should print down here, thanks to my handy dandy logic counter. Can I cover it up there? Ooh, I can. So there's the signal. We'll see if we get some follow through on this one. There is some room to move down here. Of course, the first obstacle is going to be the low here around 48.57. If we can see it breach that, well, next stop down here, what's that, 48.52.53? That seems reasonable. So I've got my break even, my auto break even trigger in play. And what this does is you can preset this, or you can trade without it. You don't need to have a break even, an auto break even. But what it will do is it will take my stops and automatically roll them to break even once that price is hit. Most of the time we'll trade with the auto break even just because it especially when the market's sideways like this, it gets us, gets us out of a wandering market. Obviously what we're looking for is momentum. All right, so far so good. Let's get a close here below. Somebody trade 48.57, and then we should be on our way. We're trying. What's the low here? Oh, it is 48.57, so nobody's taken the other side of that yet. 48.56 3/4, that's what we're looking for. That's going to, you see what's happening right now is we've got some buying going on because of this low here. The bulls are thinking, oh, this is going to turn into a sideways trading range, let's buy it up. And that's what they're trying to do. Their stops, however, are going to be right below the market. They're going to be right down here somewhere. And same thing with their orders here. Their exit orders are going to be right there. So if we can see somebody trade 48.56 3/4, 56.5, we're going to start tagging some of these exit orders, which are sell orders. And that should help bring prices down. Russell says we've got a trend change signal on the eagle. Let's take a look at that. Oh, right you are, Russell. You could even interpret this as a rule of three type scenario. It's a very big rule of three, but yeah, we're working on our first trend change signal, so the band is changed over. Good opportunity for a second push entry, so we know the current limit of the bar. And again, this isn't a bad idea if you've got a market, you're looking at it, you're looking at this market, it's sideways, right? Just look here at the left side, the market is sideways. So if it's sideways, maybe we'll take a look at taking a second push on the entry, which means we let the signal engage, let prices retreat from the signal, and then place your order to short, in this case below the low. What that does is it keeps you out of a market that is intent on continuing sideways. Which this one may well be doing. Well, we kind of figured it would be a bit of a chop fest today, given yesterday's rather dramatic rally. It used to be you could anticipate a market would rally for a couple of days. If it had a strong rally day, you'd normally say, oh, tomorrow will be a rally day as well. No more. Now it seems you get a rally day, the next day is a chop day. All right, here's a first micro-macro cross lower. So it tends to be a high probability signal. So a few things here on the NASDAQ, looking a little bit more bearish. We'll see whether or not that gives us any follow through though. Or if the buyers are going to continue to dig in around these lows. Soybeans still plodding higher, hooray. Here's that soybean trade we were following on the Eagle, and we took that one on a second push also. Right, so we allowed the signal to engage, it retreated, we placed our order above the high of that bar. Again, just looking for some renewed momentum to bring us in. Okay, crude oil tailing off a little bit. I'm going to delete my break-even and profit targets. Again, maybe I can just show you how some of these stop strategies will roll for you. Okay, crude oil took a little bit of a downtick there. Come on. My goodness, they sure like 48.57. Keep that number in mind. That's going to come into play next couple of days. If you're following the NASDAQ, 48.57. is going to be a popular number. Here we go. All right, I'll engage my chandelier stop strategy. Now watch what happens when I click accept. So the trade manager has now picked up my stops, and it will begin to manage it according to that stop strategy. I'll pick something more aggressive in a moment. I'm just trying to give the market a little bit of room to get some momentum going. Wow, should have been watching crude oil a little bit closer. Here we had a very nice late filter entry signal. So again, the filter goes out of sync, comes back into sync. The trend line never changed color. You can see why this is such a high probability signal for us. The market broke the primary resistance. Boom, down she goes to the median line, right where we would expect it to go. Oh, hooray. The trade manager actually rolled my stop for me a little bit here. I will leave the break even and profit target going here for the Eagle trade. Come on. You know you want to. Oh, you guys. Don't you dare flinch right there. All right, so the trade manager nicely rolling my stops down. I can probably go with a slightly more aggressive stop now on the Falcon trade. Maybe we'll go with a ATR stop. We have hit our high probability profit targets. And normally on days like today when the market seems so choppy, I much prefer to go all in, all out. Just grab the money when you have it. But hey, we're in the demo room, so bear with me as I try to demo how the trade manager will roll your stops. And like I said, you've got different stop strategies. So let's say, you look at this and you say, oh, wow, we've got $100 in open profit here. Maybe I want to protect that a little bit more aggressively. Well, you can go with something like the parabolics or the bar high-low. Those are two of our more aggressive stop strategies, and you can always preview them so you can see where they're going to be at. On this next swing, if we can ride out this next swing, I think I'll go into the parabolics. Because we're getting down here to this 48.53 area. might see a little bit more buying come back into the market. Come on down. There we go. There you go. Come on, at least show me 48.50. In fact, that's where I'll put my break even at 48.50. So I've enabled my ATR stop. When this bar closes, the trade manager will automatically roll my stop there. We'll move the break even up to the low of the bar. So you can see how the auto break even works. Stinkers. Oh, we hit the break even. Oh no, we didn't need the break even. The stops brought us down to break even here. And same thing with the Hawk, sitting more or less a break even trade. But you know what? Always consider your open profit, right? If you got a fair amount of open profit, then don't be shy about grabbing that. Good morning, Jim. Jim says the YM's bouncing off of the hard edge on the Eagle on the 15-minute chart. We should see them tail off here a little bit. Come on. All right, they didn't hit the break even, but remember I told you can always hit a manual break even. Watch this. I'm going to hit the break even. There. It's going to be a little cozy. I think we're going to see a little bit of an uptick here. I don't expect to ride that out. There'll be a little bit of luck involved in that one, that's for sure. Well, we're going to close up the trading room here in a few moments. If anybody has any questions or if there's any markets you'd like to see, please feel free to ask. I'm sorry the day wasn't a little bit more active, but hey, that's trading, right? We can only take what the market's giving. Had we done profit on target, I think we would have done all right today because we had, what, 2 or 3 opportunities at least. And our hawk targets are always around $50. Our falcon targets around 100, so we could have walked away at least with a couple $300 today. Not a bad day for such a sideways market. But I hope you were able to see how the DTS system works. And of course, if you have any questions, you can always email me or Adam. Oh, we might just ride out that swing here on the Falcon. All right, DTS owners, we'll see you tomorrow morning, and we'll have another open house next Wednesday. I hope that you'll be able to join us then. If you are going to continue trading this afternoon, I don't think the bears are done just yet. I think we may see one more push lower. All right, we'll talk to you guys later. Bye for now.